Now, to analyze the connection between the rise in pattern of the foreign reserve amid the improvement of global crude oil prices and partial economic recovery on the global front as well, I have joining me via Skype public finance and policy analyst Olusegun Elemo. Good to have you on the Breakfast Show today. Olusegun, can you hear me?
Yes, I can hear you. If you can hear me.
Yes, I can hear you loud and clear. Now, the recovery we are seeing in terms of improvement in our foreign reserves does not come as any surprise, as we are seeing global oil prices now trading at about $53, $55, $57 per barrel. Now, what do you make of these figures, especially as we are gradually recovering from the COVID-19 pandemic and slightly moving towards the pre-COVID levels?
Yeah, thank you once again for that question. Yesterday, I think the oil market recorded a boost for the first time in about a year. I think it was yesterday, I think about midday, the oil price rose to about $58, to a barrel. And then at the close of business yesterday, I think it dropped to 57 again. But it's a good indication, not just for Nigeria, but for the entire global market, because we are beginning to see some recovery in economic activities across the world. And this will now also impact our foreign reserve. Like CBN said, and you rightly quoted, 36 billion as of January 27 or thereabout. But you know that in 2019, I think December 2019, the reserve was at 39 billion plus, $39 billion. So if we could attribute the huge drop between $39 billion and $36 billion to what has happened in the whole of 2020 with regards to COVID-19. But as you rightly mentioned, as economies begin to recover now and as vaccines rollout continue to increase, and I hope Nigeria is also able to quickly procure the vaccine, vaccinate as much as possible, so that we can then continue to participate in global economic activities.
Now, as at last year, during the worst hit of the COVID-19 pandemic, the biggest fear on so many economic watchers' mind was the fact that we wouldn't want to see our foreign reserves drop to about $30 billion. That would be one of the harshest we would have had to deal with compared to with regards to dealing with the COVID-19 as well. But at this point in time now, the fixation on crude oil is still the same mistake we are making one more time. Do you think that we have a commitment on the part of government as well as private sector engagement as well to ensure that we diversify the economy, not just on paper or the blueprint that we have, but in action as well, because we cannot solely rely on oil, which is our major revenue earner in terms of foreign exchange?
Yes, certainly we can't continue to rely on oil. And I think the finance minister mentioned recently that indication from the 2021 budget shows that non-oil revenue is expected to rise up to as much as 70%. And that's a good one if we're able to meet that kind of revenue target, such that non-oil revenue able to contribute as much as 70% to the national treasury. I think that the issue I have about that is the performance of the non-oil revenue component of the budget. At the end of the day, what happens if you're able to disaggregate it? How do they perform? But like you said, the fixation is still there. More like we're still a monoproduct economy where we rely, solely on oil and proceeds from that sector, and we really need to quickly move away from it because over the next few years now, it's even beginning to show as countries are now developing more interest on alternative energy sources. So it's going to become irrelevant. Our reliance on oil, and we need to, diversify. And I think government has a responsibility to continue to provide the necessary infrastructure, because that's the role of government in this whole diversification exercise and ambition that we're looking at. Government needs to really focus on improving the infrastructure that will enable both small, and medium enterprises to grow and providing credit. And this has to be intentional. Government has to look at how, okay, what is the policy direction and which sector will, best give us the kind of revenue, both, locally and, foreign exchange, that will help us to grow our foreign reserve. And I think, government just needs to take this very seriously, and those running government needs to be urgent about it.
And beyond the foreign reserves now, for so many, they say the state of your economy reflects the state of your currency. Now, there are forecasts that would likely see the naira also hit at about 470 naira to the dollar. Now, talking about stability within the market, liquidity injection, and other efforts that we expect to be able to keep the market a little sane, do you think we will see a likely devaluation of the naira further? What's your thought on that as well, looking at the local economy?
Well, I think that if the oil continues to rise and OPEC is able to maintain the cut, and Nigeria also, able to also align with OPEC in maintaining the cut and stabilizing the market such that we're able to push demand above supply in the market, then we can see oil, go up a little more than it is right now. In that regard, we're able to earn more foreign exchange, and then the central bank can then provide the necessary intervention for the market. So in that light, I don't see a further devaluation, of the currency. But if, for instance, the second wave, continues to eat deeper than it is right now, and then perhaps maybe the vaccine rollout is not pacing up as it should, and then demand for crude then drops, then there might be, if the pressure on the naira continues to rise. I think that might necessarily be the...
Your statement just leads me to my last question. Painting the worst and best scenarios at this point in time, what's your forecast as well in terms of our reserves? In terms of the worst case scenario, the shock of the first wave of the COVID-19 left us unprepared. Now we are dealing with the second wave of the COVID-19, but now that there are reports of new variants of the COVID-19, anything can happen, and we have to be prepared for the external shocks. These are beyond our control, so best and worst scenarios now.
Well, what's going to happen is that, for instance, we need to position ourselves for yes, and to align what's happening across the world. The idea that some people are averse to vaccine is not, I don't think it's tenable. So we really need to protect the economy. And the way we are going to do that is to ensure that we also vaccinate as much as possible in the shortest possible time, so that we can put the country on the path of growth and our people can then continue to participate in the global economy. What is going to happen if we don't go that route is that we will lock ourselves in, and then we're not able to participate, and then it will continue to put pressure on whatever reserve that we have. And that might mean that the currency will continue to drop further, as CBN may continue to feel the pressure to devalue further if we don't have a strong economic outlook with regards to the foreign reserve.
Thank you very much for your time on the Breakfast Show today. Olusegun Elemo would continue to expect government to try as much as possible, put strategies in place to limit the external pressures we're experiencing, and then all of these would not force our hands or our direction to the wrong path. Thank you very much for your time on the Breakfast Show once again.
Thank you for having me.